Welcome to the CME with the CBDC Asset Group. I'm your main man, Corey, and today we're talking about CME Group. Friday, October 22nd, CME Group overtakes Binance as the largest Bitcoin futures open interest fund. Their holding tripled this month. Also on the 22nd, Bitcoin futures ETF hit NASDAQ. ProShares Fund is close to hitting contract ownership limits set by CME for any single entity. What is the Chicago Mercantile Exchange? The CME Group is the world's largest financial derivatives exchange and trades agricultural products, currencies, energy, interest rates, metals, stocks, indexes, and cryptocurrency futures. Why is this relevant? Because it's the world's largest derivative exchange. What is CME? Why is it relevant? What does their large recent purchase mean for crypto? And what is the historical significance of that purchase? All right, let's dive in.
CME's Bitcoin futures contract, ticker symbol BTC, is a USD cash-settled contract based on the CME CF Bitcoin reference rate, BRR, which serves as a once-a-day reference rate of the US dollar price of Bitcoin. The BRR aggregates the trade flow of major Bitcoin spot exchanges during a 1-hour calculation window into the US dollar price of 1 Bitcoin as of 4 p.m. London time. The Bitcoin futures contract trades Sunday through Friday from 5 p.m. to 4 p.m. Central Time. A single BTC contract has a value of 5 times the value of the BRR index and is quoted in US dollar per 1 Bitcoin. The tick increments are quoted in multiples of 5 US dollars per Bitcoin, meaning a 1-tick move of the BTC future is equal to 25 US dollars. BTC futures are block trade eligible with a minimum quantity threshold of 5 contracts. BTC futures expire the last Friday of the month and are listed on the nearest 2 months in the quarterly cycle, plus the nearest 2 months not in the quarterly cycle. Let's illustrate this. Assume the active contract months are December and March in the quarterly cycle, and January and February as the nearest 2 non-quarterly months. As the December contract expires, the June contract becomes active as the next month in the quarterly cycle. As the January contract expires, the April contract becomes active. This process continues throughout each year. Bitcoin is a large portion of the growing digital asset market. BTC futures provide investors with transparency, price discovery, and risk management capabilities. The contract will also allow individual market participants to access the Bitcoin market as well as hedge any direct exposure to Bitcoin pricing. For more information about Bitcoin futures, please visit cmegroup.com/Bitcoin futures.
So we've seen this big move by the SEC to tacitly allow Bitcoin futures to start trading.
Yep.
What is the status of FTX for people in the U.S. who want to use the platform? And what do you think this now means for the scope of U.S. kind of regulation, if we want to call it that, of the crypto industry over the next 6 to 12 months?
It's a huge step forward. And I think one thing that is really cool about it is that the SEC for a while has been signaling what would need to happen for them to get comfortable with the Bitcoin ETF. And this is very much in line with it, right? All of the rejection notices that they sent were, many of them were combined with color about, look, our biggest concern is the regulation of the markets, of the venues that these Bitcoins would be trading on, right? Especially anti-market manipulation regulation. And, the Bitcoin ETFs that we're seeing right now on our regulated futures platform, I think that we're going to see more and more structured products with cryptocurrencies and them popping up that draw on regulated platforms. We're excited to join that, frankly, with, we acquired LedgerX, which is a CFTC licensed platform earlier this year. I also think that we may see spot cryptocurrency exchanges, enter a new regulatory framework sometime over the next few years, to be determined what that looks like. But I would not be surprised to see more regulation of the markets and exchanges, especially on the anti-market manipulation, healthy market side.
And you have a legions of quotes here. I mean, your investors are not just big venture capital firms. You also have the Teachers Innovation Platform. You have, sort of pension type funds and institutional investors and the traditional venture capital here, all looking at what they think is kind of the future of the financial system that you're working on. They believe you're in the Bahamas speaking with me now. Would you ever move your headquarters to the U.S.?
So we do have a U.S. headquarters for U.S. business. Right now Chicago is our largest office. So we also have some in Miami, and a few other places. In terms of what is sort of the relative activity of those two venues today, there's way more volume that trades on the international platform than on the U.S. platform. It's probably a factor of 30 or so different. I'm really optimistic that we may be able to grow our U.S. footprint by quite a large amount over the next few years. And what are the things that are going to lead to that? It's all licensing and regulatory. At least that's a long part of that.
Yeah.
I think that again, we see LedgerX as a big piece of that. We're excited to work with the CFTC, excited to work with the SEC, and with other regulators to figure out how we can have fully regulated and licensed market activity in the United States, which is able to mirror the sort of combination of futures, spot and collateralization that really makes the capital efficiency of the platform work.
Exactly. Sam, great to have you today. Congrats, and please keep us posted. We appreciate it.
All right. Well, taking a look at our chart of the day. Right now, leveraged funds on the Chicago Mercantile Exchange are raising their bets against Bitcoin rising to a record high in the week ended of October 19th, possibly to profit from the widening gap between futures and spot market price, writes CoinDesk's Omkar Gaboli. A CFTC commitments of traders report showing leveraged funds held a net short position of 31,000 contracts, an increase from the previous week. Record shorts by leveraged funds does not necessarily mean these traders had a bearish bias. Rather, they may have raised short positions in the futures market and simultaneously bought the cryptocurrency in the spot market, booking the so-called carry trade. The strategy is initiated when futures trade at a notable premium to the spot price, and trades can profit from an eventual convergence of prices in the two markets. The annualized premium in the front month Bitcoin futures contracts surged from 1% to 20% in the run-up to ProShares' Bitcoin strategy ETF launch last week, and was last seen at around 13%. Earlier this month, analysts had warned of an uptick in futures premium and renewed interest in cash and carry arbitrage.